Hey, I'm Mike, and welcome back to Zero to Wealth, your blueprint for becoming a confident investor. Last time we talked about how easy it is to start investing with just $100. But here's the real question no one talks about. What happens the day after you invest and the market suddenly takes a massive nosedive? This is the number one fear that stops beginners from ever getting started. And I'm going to be honest with you, I've been there. When I first started, I panicked a lot. I watched my account drop 50% in a single week, and I slammed the sell button, thinking I was protecting what was left. But that moment of fear didn't save me. It cost me years of growth. If you let fear make your decisions, you will guarantee your own failure. Because the biggest threat to your money isn't the market, it's the fear inside your head. In today's video, I'm going to show you how to crash-proof your mindset. Not to avoid crashes, because they will happen, but to give you the emotional tools and simple strategies to survive them and come out stronger, more confident, and more wealthy on the other side. If you're ready to finally break free from the fear of market volatility, hit that like button, and let's dive into the truth about crashes.
Part 1. Debunking the fear. When people hear market crashed, they panic, like it's the end of the financial world. But here's the truth. Market crashes are completely normal. They're not a sign the system is broken. They're just a natural part of how the economy works. Since 1950, the S&P 500, that's the index that tracks the biggest US companies, has gone through roughly 38 market corrections, drops of 10% or more, and 12 bear markets, drops of 20% or more. And guess what? It has recovered from every single one. Every single time. The only person who really loses money during a crash is the one who sells at the bottom. That's when a temporary dip becomes a permanent loss. So here's how I want you to think about a crash. It's not the end of the world. It's a sale. When your favorite store has a 50% off sale, you don't panic and sell your stuff. You buy more, right? Well, when the stock market drops, it's basically having a giant sale on great companies. That's your chance to buy quality investments at a discount, not run away from them. Part 2. The crash-proof strategy. Now let's talk about the strategy that completely removes fear from investing. Dollar cost averaging, or DCA. This is the single most powerful method for beginners, and it's almost impossible to mess up. Here's how it works. DCA means you invest the same amount of money on the same schedule, no matter what the market is doing. It could be $25 every Friday, $50 every week, or $100 on the first of every month. Whatever fits your budget. And here's why it's so effective. When the market is high, your fixed amount buys fewer shares. When the market is low, that same amount buys more shares, like buying everything on sale. Over time, this averages out the price you paid, and your investment grows steadily without you having to get it right. A simple example. Let's say you invest $100 every month. Month 1. You buy 1 share at $100. Month 2. You buy 2 shares at $50. Month 3. You buy 4 shares at $25. Month 4. You buy 1 share at $100. You invested $400 and bought 8 shares total. Your average cost per share is $50, even though the stock spent most of the time at $100. This is the magic of DCA. The dips become your advantage. Why DCA works so well. DCA does something incredibly important. It removes emotion from your decisions. You're no longer trying to predict the market or guess the perfect time to buy. You just stick to the plan, and the plan works for you. Here's what most beginners don't realize. When you try to time the market, you almost always miss the best days, and the best days often happen right after crashes. Missing just the 10 best days over 20 years can cut your returns by more than half. That's why the pros say this golden rule: right finger time in the market beats timing the market. Every single time. So instead of worrying about when to buy, DCA lets you benefit from all market conditions, especially the scary ones. When prices fall, you're buying more. When prices rise, your previous purchases grow. Either way, you win by being consistent. That's how you crash-proof your strategy. Part 3. The Mindset Shield. Now, let's talk about the most powerful investment you own, your mindset. Because when the news headlines start screaming, "Market crash," your mindset is the shield that keeps you steady. Here's how to build it. 1. Remember your time horizon. If you're 30, you're probably not touching this money for 30 years. A dip today doesn't matter for a goal 3 decades away. Short-term drops are just noise. 2. Focus on contributions, not your balance. Don't check your portfolio every day, it'll drive you crazy. Instead, focus on the only number that matters. Did you make your DCA investment this month? If yes, you're winning. 3. Check your diversification, your safety buffer. Your portfolio shouldn't be 100% stocks. Bonds, cash, and other stable assets act as your shock absorbers. They don't drop as hard when markets crash, giving you the stability to stay calm and avoid panic selling.
So here's the big takeaway. The real enemy isn't the crash, it's the fear. If you stick to your DCA strategy, stay on schedule, and keep investing through the ups and downs, every market drop becomes something powerful. A huge sale on the path to building real wealth. When you follow a plan, stay diversified, and focus on the long term, a market crash stops feeling like a crisis. It turns into an opportunity, the kind that smart investors quietly use to get ahead while everyone else panics. And I'll be honest with you, I wish someone had sat me down during my first crash and told me this. Because the biggest mistake of my investing journey was hitting the sell button during a moment of fear. Selling low cost me more than any bad investment ever did. I don't want you to repeat that same expensive lesson. So the next time the market dips, don't panic. Take a breath, trust your plan, and remember, your mindset is what makes your portfolio truly crash-proof. Now let me ask, what's your biggest fear about volatility right now? Drop it in the comments. I read every single one. This mindset is your shield, but there's still one threat quietly draining your money every day: inflation. That's why in the next episode, we're going to break down how to beat inflation and stop losing money, a fundamental skill every beginner investor needs. So make sure you subscribe, turn on notifications, and click on the next video right now. Until then, keep learning, keep growing, and keep your money working for you. I'll see you in the next one.